Certainly. Hey, thank you everybody for joining us this evening as we are on our third part of a four-part series. This time we're going to be focusing on mortgages. We really appreciate the fact that you're here with us, and it's a huge honor to have a real property expert giving us really cool insights. Please don't hold back. Ask all the questions you want in the chat session, and of course, Raf is delighted to help you, even if you're in different stages of deciding whether you would like to make a property purchase now. If it's still very early, you're midway, you're thinking about it, or you're actually already in the process. He's an awesome person because he gives you straightforward, very easy to digest advice. And Raf Jacobs is with inspireapartments.com. Is actually, the company is Inspire Property Experts, and they give you all kinds of fantastic advice on anything from getting tips to the understanding how the whole process works and how it might be different from the country that you're used to being doing investments. Also, all the different aspects of mortgages, and the best part for what it is like going at and giving very cogent advice on mistakes to avoid that they're pretty common. So without much further ado, we have Professor Raf Jacobs here, real estate expert, and please don't hesitate to reach out to him afterwards. Raf, take it away. Thanks for joining us.
Thanks, everyone. Welcome at this third webinar. Just a brief introduction. So some people might know me from previous webinars. My name is Raf, originally from Belgium, but in Barcelona for nearly 20 years. I run Inspire Property Experts. We help people like yourself take better decisions on the property market. We don't sell the properties as agencies do, because there's thousands of agencies in Barcelona and around. We're on the side of the buyer, of the investor, providing advice to make sure it's the best property, the best price, the best contracts, and so on. Beside that, I teach at University in Barcelona in the Real Estate Master. That's a program for senior professionals like lawyers, people from family offices, and so on that want to learn more about real estate. I teach specifically on the subject of how do you help buyers, how do you accompany buyers. It's in the US, for instance, it's very common to have a buyer agent. In Spain, it's not common at all. We are buyer agents, investment advisors. That's our job. I also, the City Council of Barcelona asks me, the last time was last week, to speak to their international community about properties, to advise people who arrive here, people who have just landed in Barcelona, or people who live here for longer and want maybe to buy instead of renting. So that's what I do as well. More information you find, I'm going to say this a few times, but this is a short webinar. We can't cover everything. There's a lot more information on my blog, or if you follow me on LinkedIn, I post regular market updates there. But beside the webinars, my day-to-day job is helping the buyers. To give you an idea, how does my day look like? Today, we've been negotiating the purchase of a house in Cervelló, which is 20-30 minutes outside Barcelona. We're renovating an investment apartment in Poble Sec in the center of Barcelona. We're running workshops with people who are starting, where we, with a map of the city and with their budget and with simulations from banks, what is possible, what can I buy, what is realistic. We're helping other people make decisions for houses in Sitges, in Sant Pere, in Malaga, in Alicante. So that's my day-to-day, my and my team's day-to-day job. What are we going to talk about today? Mortgages, but there's a few things first that you need to know about the property market related to mortgages. So that we set off with right understanding of the market. Mortgages is one of the top 5 buyer concerns, international buyer concerns. How to optimize them, the mortgages, the financials in general. We talk a little bit about that. And then the biggest part of this session today, tips, insights to help you take better decisions, help you take better mortgages, or maybe if you were not thinking of taking a mortgage, consider it at least, so you know why you decide to take one or take not one, and how you find the best mortgages. Then we talk a bit at the end on what you can do, very practically speaking, to move ahead with your projects, with your plans. Buying a property is a big decision. For most people, the biggest or second biggest financial decision in their life. It's a commitment. If there's a mortgage involved, there's a commitment to the bank as well. For many years, you pay interests back. So if you get it wrong, it can have a lot of implications. It's important that we anticipate what might go wrong, anticipate what you need to know, and therefore make better decisions. Things that we can't cover, but that might be relevant for you, is what we've covered in previous webinars. So on our blog, inspireapartments.com/blog, you find, and these are all from the last month. Episode 1 was about buying during COVID. What do you need to know about the property market in Spain? What's happening with the prices? What do we predict in terms of price levels for renting, for buying? That's episode 1. Episode 2 is where we talked last month in October about the process of buying a property and what can go wrong there, things you need to be aware of, how the market works, how the agencies work, what's the role of a lawyer, the role of the notary. That is episode 2. There's the expat week from last week that's asked by the city council. We talk about renting and buying. There's webinars as well in Spanish, together with Professor Gonzalo Bernardos, which is one of the, I think, real estate gurus for Spain. We did that just before summer. There's another one in Dutch as well for Dutch-speaking people. So feel free to look at that for further information. You might find it helpful. You can cherry pick what is relevant to you. The property market, mortgages, it is in the news a lot today for those who are following the real estate news. What is the general market feeling? It's a buyer's market today. It's a good time to buy properties. It's also what Lavanguardia was writing recently. But equally, it's a good time, there's an opportunity to finance your purchase. We come to that in a few minutes on why that's so. That's interesting. At the same time, the market, and that's because of COVID, some people are opportunistic, are looking at buying, people to buy a bigger place, an investment, or changing from renting to buying. But also at the same time, some other people want or need to sell quickly. And agencies are having less transaction volumes. There is less volume in the market this year than last year. So agencies are struggling. You've got to be very careful for bad properties that are presented as bargains, as opportunities because of a low price, for instance. That happens more and more as well today in the market. So take proper advice is not a luxury, and it's probably one of the most profitable decisions you can take in that purchase process. So you find all these interviews and content as well on our blog. It's not all webinars and blogs. My day-to-day job is working with people like yourself, and that's people who buy a place where they want to live, buy a place as an investment, buy a second residence in Spain. People that might not be living here, or people that live in the center and buy a place outside Barcelona. We see this more now because of COVID. People who sell a property or need to do renovations on their property when they've bought it. So all these things, that's our day-to-day job. There's stories on the blog of those people on the YouTube channel, but in general, because some people say, but you're working with very rich people with high income. No, not exactly. There are, of course, there's everything in our range, but 80% of our purchases from this year are properties between 200 and 500,000 euros. Now, what we work on, the cheapest one now is around 150,000, where we're searching property for the buyer, international buyer, and the upper range is above 1 million, but the majority, 80%, is in this 200 to 500,000, and we see a trend towards younger buyers. While in the past, a lot of buyers were 40 plus, we see now people starting to buy as of 28, 30 years old, because the market is attractive, and for the reasons we talk about now. So we've talked about that's sufficient as introduction about who we are, what we do, so you understand now where the examples come from. It's a very practical experience. I would like to know, who are you? Just tell me briefly. We're going to run a poll on screen, and you can indicate if you're a buyer, an investor, so buying a property to let it, seller, or you're not sure yet, just looking for information. This helps me pick examples for this webinar. This helps me decide if one example is relevant or maybe not relevant, depending on who you are, who my audience is. So see, okay, so people are voting. That's great. Have a look at your screen or your iPhone or your tablet. Okay, so we see that everyone on the call is buying or investing. 1 out of 5, to give you an idea, 1 out of 5, 20% is looking to buy as an investment. Okay, I'm going to stop that poll. We close it. Thank you very much. This is very helpful. Look at this. This chart shows the interest rates from 2007 till August, no, till October this year. We are at a historic lowest point ever. It means borrowing money has never been cheaper than today. If you would go back to just before the previous financial crisis, property crisis, mortgage rates were up to 5% approximately, and they dropped. Now the Euribor, which is the reference rate for mortgages, is minus 0.40 something, so nearly minus 0.5. What does that mean? That means that mortgages become cheaper. That means that as a buyer, you have a lower cost to access capital from the bank, to access financing, but at the same capital from the bank. So you can, with the same amount of savings, either buy more property, a better property, or maybe you just spend less and your payback is going to be lower. This is a very important trigger for demand on the property market. Low interest rates, there's mainly 3 groups of people that benefit from this and that will buy more properties because of this. One, it's people who are today renting and buy a property because they see the cost of ownership, the cost of financing is so low that it's worth doing it in many cases. 2, people that are living in a property want a bigger house, want a second residence, and they say, well, it's very affordable now. And 3 is investors, people who buy a property to rent it out afterwards. What this does is this multiplies your return on investment, your ROI. Practically speaking, for a typical investment apartment in Barcelona, because one out of 5 of you is looking at investing. For a typical investment apartment in Barcelona, let's say in the 200,000 to 350,000 range purchase price. If you rent it out during 2 months, maybe 3, that is sufficient to pay your capital cost, to pay your interests back to the bank. It means you have 9 or 10 months of rental income after having paid the bank back. That is incredible. That is the multiplier on it. It means that by using the bank as a lever, you can get your return on your own funds easily above 10% annually net, after the interest rates, after the taxes. Compare that to any other investment on the stock market, bonds. There's nothing that compares in terms of return and risk profile to that when you leverage. The only thing you need if you want to borrow money is what the banks ask it: stable income, recurring income, a job, work contract, and a little bit of solvency. 40,000 euro, 50,000 euro, it's a great start. The banks are happy to finance that, and you access properties around 200, maybe up to 250,000 euros in Spain. It means you don't need much savings to buy a property today. Financing, the financials in general, how much can I spend, is one of the top 5 concerns of international buyers. We did research of the past few months. The main concern is that people are worried to pay too much for a property or to make mistakes. It's a good concern. So that with the agency that there's no trust, or there might be fraud involved or hidden information. Problems with the properties, it's more technical problems with an apartment, with a house, surprises that afterwards can cost a lot of money. People also mention they don't know what are good agencies. There's too many agencies on the market, but the financials is a response that a lot of people give as a main concern for this big financial decision. Now, we mentioned that interest rates is historically low, mortgages are cheaper. We mentioned who benefits from this, but at the same time, and this is specific, and because of the Corona situation, property prices have dropped as well. They have dropped, they are dropping, and they will remain low for several months. I explained that in episode 1 of the webinar number 1, why that is. So if you're interested in that, feel free to listen to it. But that combination of lower prices and it's cheaper to finance the purchase is very attractive for people if you want to buy. So what I want to say is you don't have to finance your purchase, but you should consider it. You should do the numbers, or we can help you do the numbers on it, because the impact is low. And imagine if you have 250,000 euro on your bank account that you can use to buy a property. You can buy a 200,000 property cash. You pay with your own funds, you pay it, you pay the taxes on it, there's no debt on the property, and you have not much left in your bank account. You have maybe 20, 30,000 left on your bank account. Now, you could buy the same property by only using 50,000 out of your 250,000, finance the rest at a cost of a few thousand euros per year in the first year and less in the next years. Meaning that you don't decapitalize yourself, you keep a buffer of 200,000 euros on your bank account, and that's something you should consider. In today, there's more uncertainty in the world. There's elections in some parts of the world going on. There is uncertainties in Europe. There's COVID. All these things, people might lose jobs, etc. So you have options. If you have some savings, a stable income, and a work contract, you can access financing and at least consider it. It's a clear buyer's market. At the same time, the business model of banks in Spain is changing. It's changing significantly. If 10, 15 years ago, you would go to a bank, you would have gone to a bank and say, I want to buy a property in a house. You were treated like a VIP customer for a mortgage. They loved it. They would have a proper meeting with you, offer you coffee, talk about it, have another meeting, etc., etc. Today, the banks, and partially because of the low interest rates, their margin has dropped significantly. They're looking for new business models. Today, banks in Spain, and you might have seen, there is banks in Spain that sell cars now. So what do cars have to do with the banking business of lending and borrowing money? Banks sell iPhones, banks sell insurance policies, banks sell coffee machines. It's incredible. It's all ways to find additional income because of their reduced income of the low interest rates. At the same time, they're reducing costs. I think there's going to be a lot of mergers, acquisitions between the banks in Spain, in Europe in general, and probably in the world, to create bigger banks, larger offices. And you see some banks are doing this already, and that's not helpful for you as a buyer, as a client, because it probably means less service, less information, and that's one of the big struggles, because you need this. That's conflicting, because you need to take an important financial decision on a property, and many people struggle to get the bank involved, to get proper information, clarity from the banks. So here's another question for you. We're going to launch another poll on how would you describe. Some of you might live in Spain, some of you might not be living in Spain, not living in Spain yet, but what's your experience with the banks in Spain? How would you describe them? And should launch the poll.
Can you launch it, Ralph? I have some difficulties here.
Okay, I should be able to launch that, yes. Hold on, because I wasn't expecting this. Oh, now I have some problems here. Apologies for this. think I stop sharing my screen now. You can't launch it, Jeff? Oh, there we go. There's the poll. You should see it on your screen now, and I'm going to share my screen again with you. So this is a multiple choice question. Just from your gut feel, how would you describe the banks in Spain, your experience with the banks in Spain? Because I've got my experience, but I don't want to assume that that's everyone's case. So I wanted to have some, just read to the topics, mark the ones that you think are relevant. Jeff, in the meanwhile, do you see my screen again?
Yes.
Okay, good. So, okay, 60% of people has voted. Go ahead, if you can, a few more clicks. What I'm reading now is the majority of the people is saying banks are unresponsive. I need to chase them. Then there's not a very large group, poor service, reliability and solutions, inefficient paperwork burden, I don't trust my bank advisor, charging exaggerated costs or fees. That's not very positive. No, nobody said great service. Someone else wants to vote? Nobody said responsive or proactive. Only one person said I trust my bank advisor. And only one person says he would recommend my bank to my friend. That's probably the same person. Okay, we're gonna close this. Let's capture it. Okay, so I'm gonna share the results with you so you see that. You should see it on the screen now. So nobody said, you see here, great service. Half of you, and most people said unresponsive. So not a very positive impression of the banks, and we can understand that. It's what we hear daily from our customers. That is also why we've decided that helping people with the financial part is so important, that to take the stress out of that, to deal with the banks, to deal with the unresponsive banks, to chase them for mortgage simulations, to compare, to negotiate the exaggerated costs down, to meet them, to work with their risk department, to work with their admin department, their back office department, who are the ones who prepare everything to go to a notary, and it's quite a nightmare. So that's also part of our job, make sure that these things are optimized and that you don't have to worry about that part. So a few examples now, and because I want to make it very, very tangible, this webinar. Here's an example, and there's a question for you later if you think this is right, true, or if you think this is false. Mike was renting one room in an apartment in Eixample in Barcelona. So one room in a shared apartment. He was paying 550 per month for it, for that room. He bought a property in September. So he found it earlier. He bought it at the notary in September. He bought a 3-bedroom apartment, 63 square meters, ready to move in, not in Eixample, but in Vallcarca, another part of Barcelona. And he pays 600 per month as a mortgage payment. 30-year mortgage, 1.4% fix. The property was a 220,000 euro apartment. The bank valued it at 230,000, so a bit more than the price we managed to negotiate. So that would have been a good purchase. And he used 44,000 of his own savings. So that's 20% of the purchase price, 20% of 220. This was one of these younger buyers, 31, I believe he was. And therefore he met other conditions, so he only paid 5 instead of 10% purchase tax. So, but the point here is he was renting one room in a shared apartment for 550. He buys a 3-bedroom ready to move in for 600, and it cost him 600 a month. Do you think that is possible? I see less people are answering now, so people are doubting probably. Half of you have. So you can also say that you don't know. That's fairly acceptable. There's no. Don't be shy, please. Okay. Yeah. People are answering. Very good. Very good. So, a few more people want to vote. 5 more seconds. 5, 4, 3, 2, 1. You're gonna stop it. 75%, 3 out of 4 says that this is true, and the rest says it's false or I don't know. So this is true. This is a real case where we actually, Mike was on all the previous webinars in June. He came to us and said, I don't know how to get started. I don't know how, if I can get a mortgage, yes or no. He has bought in the meanwhile. Now, what does this mean? He has bought this apartment, but do you think that, or would you say that being an owner costs him only a little bit more than renting, because it's 600 versus 550 per month? Or you say, no, that's not true. He's actually saving a lot of money. Or you say, I'm not sure about it. There should be another poll popping up now. Yeah, there you go. So 550 as rent, 600 for a much larger apartment, full apartment as an owner. Is that just being an owner costs him just a little bit more than renting? 50 euro per month more, and you're an owner. That's a cost that he can absorb. Or you say, no, saving a lot of money, or say, I'm not sure what is best, how I should look at this, how I should evaluate it. This is a typical rent or buy situation. So if you're renting today, you will have this scenario, and you have to. I put this exercise here on purpose because you have to think like this when you take a decision, because otherwise you might take wrong decisions. Because people are still thinking. Okay. Jeff, take a screenshot of this so that we can. It's interesting to see the results. Okay, so about 1 out of 3 people says answer A, that being an owner costs him just a little bit more than renting. So for 50 euro more in cost per month, you're an owner. Nearly half the people say he's saving actually a lot of money, and 1 out of 4 says I'm not sure what it is. So finalize this. The only correct way to look at this is it's not comparing the rental cost with the mortgage payback, because you own a property, and that's entirely different. When you rent, you pay the rent and it's gone. You pay your 550 and you never see that back. You don't get any rights after that month on that property. The payment, the 600 mortgage payment monthly, is broken down by a capital part, so the capital that the bank borrows you, and interest on that capital. In the beginning, interest is fairly high because you have a large capital outstanding there. In this case, the split in the first month was out of 600, 400 is capital, 200 are interests that he pays back to the bank. This interest rate goes down month after month, year after year. That's the cost of buying that property with a mortgage, 200. Versus per month versus 550 of renting it. That means that he's saving 350 per month. That's the right comparison, not 600 versus 550. Of course, I know, and you know as well, as an owner, you have additional costs. You pay your city tax, you have to pay the notary, the land registry. That's a one-off cost, and it's less than 2,000 euros one-off. You have to pay condominium costs, but sometimes you pay as a tenant as well. Utility costs you typically pay in both scenarios, so that you don't have to take it into account here. But think about it this way when you decide to buy a property. So here we saw it was a bit higher than the rental cost, but actually he's saving money. Here's 2 more examples, and again, those 2 people were also on the webinar in June. Giuseppe, Italian guy living here in Barcelona since several years with his girlfriend. He was renting a 2-bedroom apartment in Barcelona for 700 a month. we found him a fantastic off-market opportunity, so not a listed property, of 2 bedrooms with a balcony, something he didn't have it before, 64 square meters, and his mortgage cost on 30 years is 600 per month. Purchase price, there's no question anymore about this. So this is a real case. It's not true or false. He bought a property of 177,000. It needed some renovation, okay, but he put in a very small number of savings into the transaction. He used the rest for the renovation. And what he said is, when he comparing both options, and he gave me this input today, he said it's a huge difference. I'm doing an investment for my future. I avoid having my savings without ROI, without return. And in terms of life activity, sentiment, he said, I'm super happy, he said, because the flat is totally renovated to my preferences. So that's another example. I'm going to explain later that a lot of people keep renting because they don't know that this is possible. And you got to be aware that this is possible today because of 2 things: lower interest rates and lower property prices. Third example, a couple from England, we're renting in Borne, very nice lifestyle apartment, 1,300 a month. We found them, we searched the apartment for them, we showed them the best of the market. They decided for 1 property. They went to 3 bedrooms, 84 square meter, and as he said, much lighter, spacious and quieter than Borne, and much more livable in the long term. And their mortgage is now 795 a month, again over 30 years. This was a 240,000 euro property, again with a very small down payment, 55,000 euro. That was one of their main concerns when they came to us after the webinar in June. They said, we are not sure if we can buy, because he had a temporary work contract. They had some savings, not much more than this number here. And they didn't want to spend all the savings on the property, wanted to keep some buffer. She had a fixed contract, but they didn't have a long work history in Spain. So it's hard for the banks. We looked at different banks, different mortgages, and found this solution for them. So this is possible. Keep it in mind when you're thinking of buying or renting or buying. So we mentioned this, the doubts were there. There wasn't clarity what was possible. What you got to think about is when you think of buying and of a mortgage, you've got to balance 3 key parameters. And if they're not balanced, your expectations are not realistic. You're starting off in the wrong direction, and you will get frustrated. You won't find the property. You won't get the banks helping you. So there's a balance between what's your budget, the property price, but that's your own savings plus the mortgage. That's for most people a given number. We got to work on that with the banks to understand what that number is. Most people don't know exactly what that number is. And again, depends on how much own money you put in, and you don't have to put all your saving into the transaction. Property features: how big, how beautiful should the apartment be or the house be, and the location. Location impacts prices a lot. So in these workshops, we worked on with a map on the table. If you look at that location, you can find these properties for that budget. But if you want another location, higher up on location, you won't find these properties anymore. So you either have less features, so smaller property, not a beautiful property, or you pay more. That's how we balance it. It's like an equalizer. All of these 3 have purchased in the meanwhile. So what can go wrong when you look at mortgages? I think first, we see a lot of cases where the buyers have wrong assumptions, incorrect assumptions, and it's probably just because you don't buy properties every day, you don't speak to banks every day, so that's absolutely normal, understandable. We see a lot of people who come to us and they don't have a real plan, a financial plan, and they say, we've been looking at properties for 4 months. We had someone looking for 9 months, and I don't find what I want. Then I found something, I wanted to buy it, and then the bank said I couldn't buy it. So that's like lack of planning. We've got to run very early on in the process, in parallel with the kickoff workshops, simulations from different banks, not just your bank. I'm a big believer of putting banks into competition. They're a supplier of money to you. That has a cost. That's called the interest rate, but you need to get the best deal for you. the best deal in terms of interest rate and all the other conditions that the bank might require you to sign up for. If you don't have the bank aligned, if you don't know exactly with 60,000 euro I can buy up to that purchase price, or with 150,000 euro my maximum budget is going to be 550. If you don't know these boundaries, you might see a property and you probably lose it, because I wouldn't recommend you to commit to negotiate, to commit to a property, to sign anything, to make payments to the seller if you're not sure about your financials, because you risk losing that money. The second thing that happens is with buyers often they believe that they can't buy, and that's because they didn't know the examples before. They thought like we're paying 1,300 as rent, so if we buy, it's probably going to be a larger cash outflow monthly, and so we've seen it's not often the case. You only need a minimum amount of savings to put into the transaction, and then and three is that people that are very confident that they can get they can buy, but they didn't speak to their bank. And unfortunately, every bank is different. They use their own criteria, I think, to make it difficult to compare against between the banks. And then many people, when they see a property, the bank says no. We can't do this because you're autonomous or your income is in US dollars, and some banks don't finance if your income is in US dollars, for instance, or in some other currencies. That's part of preparation, realistic expectations before you start. Once you find the property, then we reactivate the discussion with the banks. We get not a simulation, then we ask them for proposals, binding proposals based on that property that you want to buy. But don't wait. The banks will say, wait, find the property first and then you come to us. They know that, because once you find a property, you want to go fast. You don't have time to compare 5 banks. And then your bank has a benefit. They invite you to the office, and then they will push you through certain conditions that are not optimal, but then it's too late, because you either have a non-optimized mortgage or you might lose a property, because good properties sell quickly in Spain. So when you ask offers from banks, simulations, get it on paper. They are obliged to do that, and they often resist doing that because they know you will negotiate with other banks, so you might do that. They have to do that. They often say, come to the office. You don't have to go to the office necessarily. You can do things over phone, over Zoom, over email. That works perfectly. Some banks actually do everything online. What can happen as well is that when you see a property you want to buy, let's say you see a property of 300,000 euros. The bank told you in the simulation, we finance 80% of that. So based on that assumption, you agree to this 300,000 euro, you pay 10% to the seller in your ARAS contract, you pay 30,000 euros. And then the bank sends in a tasador, a valuation company, an appraisal company. And that company says, this property is worth 270. The bank will no longer finance your property at 300,000. They will apply 80% to the 270, not to the price you're paying for the property. That means there's 30,000 less that you have to pay out of your own savings. For most people, for many people, this becomes a deal breaker. They can't buy the property anymore because they don't have these savings available for the purchase. How to avoid that? Doing your work properly, the due diligence, the benchmarking before you decide to buy. Out of the properties we've bought for our customers in June, July, August, September, and October, there was no single case where the bank valued the property below our purchase price. In all cases, there was one case at the purchase price, and all other cases they valued it significantly above the purchase price. What does it mean? We know when properties are good. We know you need good value for money. You need to have a property that long term is a good investment, but so you don't pay too much for that property. We stop a lot of purchases, a lot of properties because we believe they're too expensive when the owner doesn't want to come down with the price. So know when you want to walk away, when you should walk away from a negotiation to avoid this. If the bank values it below, you have problems with your mortgages. A lot of cases, one but last point here, where there's exaggerated fees from the bank. It's not just the interest rate that you pay, but you often pay opening costs if you pay back your mortgage partially or in full before the end time of your mortgage. They might oblige you to buy other products from the bank, like house insurance, life insurance, other types of insurances. There might be costs to maintain a bank account. Sometimes that's okay, but you need to look at the full picture, because sometimes to get a lower interest rate, it's worth to take some of these extra products. It makes sense financially speaking, economically speaking. In other cases, it's an exaggeration. I had a deal recently with a Catalan lady who worked at university, and she bought a property with her own bank, BBVA. And there was in the small text, because they shouldn't do it, in the small text, there was another insurance that we'd never seen before. They just invented a name for it. And that came down to, over the lifetime of the mortgage, 14,000 euro of additional cost over a 15-year mortgage, nearly 1,000 a year. It's a shame. It happens. They try it, and you push back to the banks, and they say, no, this is always like that. And then they understand we know how the market works, what is good, what other banks offer. We can negotiate these things. In that case, they didn't want to change it. We went to different banks. Again, you can go to different bank if you have a plan B, if you have done your simulations up front. And when you take on a mortgage, final point here, banks look at the past. Banks will never look at what you want to do in your job, future salary increases. They don't care about it. They look at history. So you need to be able to prove solid history, financial history, work history. But for yourself, be careful. Things, certainly today with economic recession, people are temporarily unemployed, might lose jobs, companies might go bankrupt. So keep in mind, have a buffer in case of, so that you don't have surprises afterwards. In general, I would recommend that the mortgage payback shouldn't be more than 30% of your net available income, of your net income. For 200,000 properties. For higher properties, for higher incomes, that ratio can be a bit higher. Some banks go up to 50% of your net income if you are one of the high-profile earners. So, more tips and insights. We've mentioned already, and I'm conscious of time, this is the last part. Start conversations early, simulations with different banks. Requirements we've discussed, work contracts, financial stability. You prepare these documents, get it in a Google Drive folder, share it with all the different banks so they have all information. It's quick. Follow up with them. Can you take a mortgage in your home country? That's often very beneficial in terms of the economics of the deal. The condition is you need to have a property in your home country or a significant investment fund or pension fund in your home country. Banks are willing to finance properties in Spain based on these assets. Banks outside of Spain will not finance a purchase here, but a guarantee being your property in Spain. They don't do that. It's too complicated, too risky for them. Doing it in your home country often has, for instance, the case is if you have a property and there is a mortgage on your property, you can increase the mortgage amount on that property you have, let's say in the UK. And then you come as a cash buyer to Spain. You don't take a mortgage in Spain, you buy debt-free in Spain. Such a model has lower mortgage setup costs in general. You might access better interest rates than in Spain, although they are low here. We have clients in Belgium, in Germany, for instance, where interest rates are still lower than in Spain. Sometimes you can deduct the interest cost, from your deductible income. There's an additional benefit for it. And of course, it also means if you take such a mortgage, you don't have to sell your property abroad to buy a property here. You can keep the property there. It generates with the savings you buy with the mortgage. You buy the property here, but you have the two assets still there. So that there's a lot of advantages of doing this. You go first. You talk to your own bank. We have examples of scenarios. We ask banks for scenarios for simulations for mortgages. What do we want to see? Not just like, can I buy a property? Because then they have free play and they will present you what they want to present you, what they want to sell. Banks are commercial institutions. Huh? They got sales targets for mortgages, for insurances. So talk to your own bank, but also to different banks. You can either go to different offices of banks, branches, or you can go through brokers. Both are possible. Some brokers charge you money to do that job. Other brokers don't charge money to do that. They are paid by the bank if you take a mortgage through them with one of these banks. Typically with brokers that don't charge, there is no commitment, so no upfront cost, no commitment to work with them. You can still go to other banks. We use it for a fairly large amount of customers, because a broker, what is their benefit? They work with, let's say, 11 different banks. One of the brokers we work quite a lot with, 11 different banks. They present in one quarter about 1,500 mortgage requests to the banks. That means volume. That means they speak not to someone at the office in a bank, they speak to the risk department directly at the headquarters of the bank. They get better deals because they bring volume to the bank. The mortgage process, the banks are going to try and persuade you to come to the office, bring a lot of documentation, sign a lot of documents. You don't have to do that. Send things, if you can, online, ask the simulation, ask what they can do, and give them the documents they need to have. The same if you do it through a broker. You need to give them the documents, sign a document that they can use, share your documents with the institutions. That's okay. Once you see a property, they need to give you a binding offer. You provide property information to the banks. They run a simulation. That's when a negotiation starts. It doesn't make sense to negotiate earlier on because there is no property, no tangible property yet. Once you have it, you negotiate. And that's where we bring down the interest rates, the other costs. And I'm a very big believer of the need for flexibility for our buyers in the mortgage, because your life can change. Maybe you get a job offer tomorrow to go to Dubai and you need to rent out your property. And your salary might no longer be in Spain. Very often, such conditions will be a penalty, will penalize you, and your interest rate will go up from one day to another. So these things need to be anticipated. But equally, you might get a big bonus next year, and you want to pay back some of your mortgage, maybe advanced. So mostly there are costs. So these things need to be looked at if they're reasonable, if they're okay, because it saves you a lot of costs in the future and a lot of surprises. And that's when the comparison between banks happens, because they make it fuzzy on purpose. Every bank has different criteria, I mentioned already, but one criteria is fairly common across banks, and that is if you are a resident in Spain or a non-resident. And they mean fiscal resident. They mean, do you pay taxes in Spain, yes or no? If you arrived this year to Barcelona, you didn't pay taxes in Barcelona, so you're considered a non-resident. If you've been working here for 2 years, you pay taxes in principle this year for last year, so you're a fiscal resident. There's couples who are, one person is maybe resident, other person non-resident. That's a bit more complicated. For residents, you should assume you can get financing up to 80% of the purchase price or the valuation, to take the minimum of these two numbers. For non-residents, banks will ask you to put 30 to 40% as a down payment. That's a lot more. But that is how most banks looked at it. Not all banks. Again, that's where we need to work with as many as possible early on to see what is possible for your case. It depends on your financial profile as well. Fixed or variable interest rate, the typical dilemma that every buyer has when you take on a mortgage. Remember, interest rate are historic lowest point ever. So it's very unlikely they go significantly down. Technically speaking, they can't go much down. They will remain low for a long time because of the recession, because of the economic slowdown in the world, not just in Spain. So things have changed a bit. A year ago, I would have said fixed interest rate is what you need to do. Today, I say fixed interest rate is what you need to do, except if you believe that they will remain low for 5 or more years. I think they will remain low. One of the big banks of Spain said, I believe yesterday in the news, that they expect interest rates to remain Euribor to remain negative until for the next decade. It's the first time a major bank says something like this. Nobody knows this. Nobody has a crystal ball. So let's be careful with that. But there is models, of course, with a variable interest rate. You pay Euribor plus 0.7, 0.9, which is low because Euribor is negative. With a fixed interest rate, you start at the cheapest deal we've signed. It was on Monday this week for a client. Was one with Sabadell, 1% fix on 20 years. Never seen it before. It's incredibly low. We were used to see in the last months 1.3, 1.2, sometimes 1.45, 2.5, depending on the profile fix. So fix gives you, fix or variable basically means if the interest rate goes up, who assumes the risk? If you take fix, the bank takes on the risk. If you take a variable interest rate, the risk is on you. You pay less now, but the risk is on you. Okay. We talked about how much. By the way, there is mixed models as well, where banks offer mortgage. I think they're very interesting. 5 or 10 years fixed interest rate and then variable. Why is that interesting? Because the highest interest you pay are in the first years. Then you have the highest outstanding capital, the principal. So interests are higher. If you've paid back a significant capital already in 10 years, if the interest rate goes up a little bit, it won't affect you that much then in year 2. So these models are good to look at as well. How much savings we need, we discussed that already. People who buy together, and that's something a lot of people don't know. And then when you go to notary, you're surprised. Notary tells you, if you buy a property 50-50 or 40-60, 30-70, you can decide whatever you want, which split in terms of ownership you have for the property. If you take a mortgage on it, you're both responsible individually for 100% of that mortgage amount. It means your partner stops paying the mortgage, you're responsible for 100%. There's nothing you can do about it. That's the law. So just be mindful of that. There is insurances you can use if you want to for against unemployment and so on, against unpayments in the future. Depends on your situation. You might consider that. And something we see with as an alternative to standard mortgage, we mentioned you can do it in your home country based on other assets, but also bullet credits. And bullet credits is you need to be financially strong to get this, but it means that you don't pay capital back to the bank, you don't pay your principal back, you only pay interest rates during the duration of your mortgage, and only at the very end you pay your capital back at once. This means that your costs, you can buy a property and maybe it costs you in terms of interests 200, 300, 400 per month, depending on the property, and you don't pay any capital back. If you buy to invest, this gives massive opportunities. You rent out a property for 1,400, it costs you 300, is 1,100 net. Of course, you need to plan to pay the full mortgage amount back at the end. But we see this a lot with banks in Belgium and Germany actually. I talked a lot. Try to get everything in 1 hour. As mentioned in the beginning, any questions you have, please don't be shy. You got my email at the bottom of the page here. Go to our website, call me, email me. I'm there to help. First consultations are for free. There's no cost involved, no commitment involved. I do this very happily, 20-minute call, Zoom call typically. And just ask you a simple question here to how inspiring you found this webinar. If this was helpful for you, was this relevant to your situation, that you learned something? And this is feedback useful for us because we want to improve. We run webinars at least 1 per month. So if you can do things better, I love to hear that. Okay, we leave it open for a bit and then I'm just gonna move the slide. So there's time for questions now. If you, what can you do next? The other seminars, the webinars, they are there. Watch them, look at them. There's articles as well on our blog. You can register for the next webinar in December. Talk about typical dilemmas. Should I do this or that as a buyer or as an investor? What is best, A or B? There's a lot of trade-offs to be made. If you follow us on Facebook blog or if you follow me on LinkedIn, you stay tuned on the market. We publish market insights, real cases, etc. And as mentioned, you got my email there, raf@inspire apartments. I think we can share these links in the chat function as well, so you have them. You'll receive an email after the webinar, a thank you mail with some of these links in there as well. So let's see if we have questions. You can use the chat function for questions. Okay, someone said I'd like to have a consultation, please. So for that consultation, please just write me a short email, raf@inspireapartments.com, and I'll set up a Zoom meeting with you. We still have quite some people on the meeting. Think about your situation. What are your plans? Are you about to buy a property, about to reserve a property? Are you just at an early stage? What are the questions? The questions you had up front before this webinar, have they been answered? If not, please just drop your questions here. So, it's a question Victor says to everyone, what is the most common error made with mortgages? I think it's people not being aware of what are competitive conditions for a mortgage, interest rate and other costs, and signing up for a mortgage with their current bank, with a current advisor, or maybe they looked at 2 or 3 other banks, but have not done a proper benchmark, not done a proper negotiation, and maybe because of lack of this information, these reference points, lack of reference points, but also we see many people who say they sign up for suboptimal mortgages because they feel uncomfortable negotiating. They say, that's not me. I don't know how to do this. I feel uncomfortable. So I think that is so paying too much for your mortgage basically, or being tied where you shouldn't be tied to your bank because the banks abuse the fact that you might not know it. Can you explain again why a mortgage is a good investing or financial model apart from keeping our savings? Yes. So I'm not sure about the question here, because apart from keeping our savings. So what if you take on a mortgage, it means you don't need to use all of your own savings to buy a property. You need maybe, for typical investment property, maybe 50 or 70,000 euro. The rest is paid by the bank. The cost of taking that mortgage from the bank is very low and corresponds probably to 2 or 3 months of rental income from that property, because I assume you talk about an investment property. Meaning that if you get, so if your interest rate is 1.2% fixed, it means that for every 100,000 euro you borrow from the bank, you pay in year 1 1,200 euros. That's approximately, for the type of property you can buy, 1 month of rental income. Let's assume you borrow 200,000 euro, you put 50,000 yourself, you buy a property around 250, and then some costs. It means your cost of that mortgage, the interest rate, is 2 times 1,200, 2,400 in a year. That is the opportunity cost. So you don't have to use all your own savings. You keep still having big part of your savings on your bank account or in other assets, maybe stocks you don't want to sell because it's not a good time to sell, or maybe another property you don't want to sell, you keep it. So you don't decapitalize yourself. You build up assets. You use the bank as a lever to generate more money for yourself. I hope, Janja, that clarifies your question. Thank you for this very informational webinar. We will be in touch for sure. Okay, thank you. You also help identify opportunities. Yes, I didn't speak much about what we do actually, but that is part of our core business. So when we have done our initial workshop and we have aligned expectations on budget, investment budget, financing, yes or no, what is possible, what type of property, why do you buy, to live, to rent out, as a second home, etc., and locations that come into play, then we go on the market. You don't do this, and we save you about 90% of the visits that are necessary to buy a property. It means that we select the market, we screen the market first, we speak to our network, we look at off-market, non-listed properties, so things you don't find on Idealista, and we visit them for you before you go and visit them. And only if they pass our filters, first on screen in a conversation and then in the visit, if the properties pass our filters aligned with your expectations and your priorities, then we will ask you to come and see these properties. So, and when we filter them, and when you say, I want to invest or want to buy for myself, we need to believe in the value. I tell my team always, I want you to tell our buyers what you would tell your sister about that property. Would you recommend to buy it? Yes or no? What are the pros? What are the cons? Because we don't sell property. Agencies in Spain, and look at webinar 2, episode 2, there's talk a lot about that. Agencies work for the seller. You go into an agency, you're not the customer of that agency. The agency defends the interests of your counterpart. So whatever they say is not good or is not in your interest. Keep that in mind. We are on your side as a buyer, so we look independent way at the properties. Good value for money, long-term investment, no technical problems. The lawyer checks it out, the architect checks it out technically. We certify what we see. We give you a checklist on the due diligence so that you know what is good before you put a signature, before you pay anything to the seller. We need to believe in it, otherwise we will do everything we can to stop you from buying it. And there is cases where we see opportunities, or where the buyer sees an opportunity, a property, and we believe it's too expensive. You can still buy that, but we will tell you why we believe it's too expensive. And if you're okay to pay for that nice view, if you pay for that special floor or special kitchen, that's fine. But you know that you could have bought a larger property, another bedroom, a balcony maybe, as an alternative. Who does choose the appraiser, the bank or the buyer? Good question, very good question, Sasha. It's typically the bank will say, we need to make a valuation, and they have their appraisal companies that work for them. But you can also do it as a buyer. It's easy to have the bank do it. You don't have to coordinate much of it, or we don't have to coordinate much of it. But there are cases where if you're unsure, for instance, an appraiser doesn't take into account the wow factors of a property. They look at square meters, how many people can live there, how big are these windows, where is it located, etc., etc. They don't care about the nice view, about the nice floors, nice ceilings, the old wooden doors. No, they don't care about it. It's not taken into account in the appraisal. Even things like private access to a terrace owned by the community for apartments is not valued much in the appraisal, but it's very much valued by you as a buyer, because you can access that. That's lifestyle, but that's not in there. What does it mean? You might sign up with a bank for a mortgage, and then they might send an appraiser in, and they might say appraisal value way below the purchase price because they don't take into account the wow factors. Then you're tied to one bank. So what you can do in that case is you ask your own appraiser. It's around 300-400 euros that it costs. You take a good company, and if that company is recognized by several different banks, so then you can afterwards take that to one or two more banks, and that's very helpful. So there's both options possible there. Another question from Amanda. Are there many banks that lend to residents with temporary residency, near with temporary residency and work permission, but not permanent residency? Yes. That is, some banks might not do that, but you don't have to be resident here. You can be resident, temporary resident. You can also be non-resident, and they also finance you. The conditions will change, so you might have to put some more savings into the transaction, but there's no general rule why banks would say no, we don't do that. If it's a specific case, Amanda, drop me an email and I will, because it might be specific to your situation, so I can look at it. One more question: can you help people based abroad to find refurbished properties here in Barcelona, in Spain, without them coming to Barcelona, Spain? I asked because of travel restrictions. Yes. Inspire started actually as a company buying properties, renovating them, and then selling or renting them. We still do that, but we offer it now as a service as well to our customers, this whole buyer agent service. Also the renovation. We got an investor from Belgium who he asked us to identify to localize great investment properties. We found several, we showed him several on screen. He wanted to travel, couldn't travel because of the first lockdown. He still decided to buy one of the properties. There was a lot of trust in the relationship, of course, and it needed renovation. And so we're doing the renovation now. We're following it up every day. We're at the property every week. There's a weekly report to the buyer. Yesterday morning we had the architect in here with different tiles for the bathroom and finishes for what type of wood for the kitchen. So yes, we can do it, and yes, we can do it if you're not based in Barcelona or in Spain. That's not a problem at all. You can actually, to buy a property, when you go to a notary, you can buy through a power of attorney. If you're worried about travel restrictions and you love a property, you can give a lawyer, one of our lawyers or someone you trust, doesn't have to be a lawyer, a power of attorney to sign in your name. If you prepare that power of attorney properly, they can only sign under so many conditions. So there's no risk involved for you. Okay. Good questions. I like the interaction. That makes it. So, who else has doubts about their situation? No more questions. I'm thinking if there's other relevant topics I need to, or I should mention. Takeaways from the session for those who are still online. You don't have to use a mortgage, of course. Consider it. Because of low interest rates combined with lower property prices, it's very attractive. But be careful with the conditions the bank offers you. It's not necessarily the doctor that lives closest to you is not necessarily the best doctor. I think that's a saying. It's the same with banks. It's not because it's your current bank or your current advisor that they offer you the best mortgage conditions. We have clients, they say, I'm happy with my bank. They've helped me a lot. So I'm not going to go anywhere else. I just want to negotiate to get a good as possible deal. That's fine, but that is emotional, okay? When I negotiate your mortgage, I take the emotion out and I get you the best deal long-term for your mortgage. Everyone decides there. Keep in mind the banks are commercial; they want to sell. I sit down with directors at banks weekly, I think, and they tell me openly they have sales targets. So it's like any other commercial organization. Keep that in mind as well. It's not they don't want to help you. They're not. So it's they need to sell mortgages. Yeah, one thing interesting. Banks typically ask you to take the house insurance with them or through their insurance broker. That's generally speaking okay, because their insurance rates or policies are, you can always find a bit cheaper, but they are quite competitive. They're in line with the market, and that's probably okay. The bank does it because they want to make sure that when they give you the money for a property, that property is properly insured in case there's a problem with it, because the property is the guarantee, of course, for your mortgage. That's typically okay. Things like life insurances, that's a different topic. That can become very expensive if they want you to take a life insurance in exchange for 0.25% lower interest rate, for instance. When you're 35, life insurance is cheap. It's a few €100 a year. Your mortgage is for 20, 25, 30 years. When you're 50, life insurance can become very expensive, and you can go to up to close to €1,000 a year. If you sign and you commit to that you take a life insurance for the duration of your mortgage, you think like, okay, it's €300, that's okay. So that will go up. Be careful with such kind of things. For the people that are still on, don't be shy. Ask me your questions. This is your chance. Your questions are relevant to the audience as well, to the other people. So think that's part of, you help the community by doing this as well. Okay. So if no more questions, then I think we can close the webinar. No more questions? Okay. So feel free to reach out if you got questions for your situation, if you want to discuss it, if you understand how we can help you buy better, find better properties, negotiate, give you the certainty, peace of mind. We're on the side of the buyer and the investor. And I believe in buying with vision, in buying with criteria, and knowing why you take certain decisions is absolutely critical. So that's why you're there. Thank you, everyone. And I wish you a very good evening.